5.7, is this a shocker? What are your thoughts even about manufactured products piping down a bit?
No, see, I think the WPI number 5.7% is on the lower side. In fact, we were expecting a number higher than this one. So both the CPI and WPI has continued to surprise on the downside. And I think the decline in WPI is largely because of the fuel price cut. If you remember, on March 31, there was a huge fuel price cut. So we were expecting a part of this cut could have been carried forward in April, but now it seems, given that the food prices we are seeing and witnessing an year-on-year increase, I think that a large part of this fuel price cut has been captured in this data. So therefore, the number has moved down to 5.7%. But overall, the numbers and the core WPI, as we have calculated, has come in at 2.1%. So that is lower than 2.4% last year. So overall, I think it's a good number, and the manufactured products prices are also not a big surprise, because we must remember that the rupee has been on an appreciating trend. So that is likely to be reflected. Last time also there was a decline. So if you look into the month-on-month increase, I think there has been a decline this year in the manufactured products. So all in all, it is reflecting that the demand conditions still remain weak, and from now on you will expect that the prices WP and CPI both should remain in within manageable proportions, and only an uptick is possible in the second half of the this fiscal.
Well, January manufacturing was closer to 4%. In Feb, it's come down to 3.6, and now it's down to 3%.
Yeah, I mean, clearly peaked off. January was, and also in year-on-year terms, the previous January was really low. We were going through almost recessionary fears globally. And if you remember, it was only from February, after the budget, that our markets picked up, stock markets. Global markets had started picking up about 2-3 weeks earlier. Well, Soumya, so can we say with a reasonable certainty that any rate hikes in 2017 is out of the question?
No, I don't think rate hike, and you will be again surprised if I say on this channel is that, I mean, don't be surprised if we get very good CPI numbers in the next couple of months. And we are again maintaining the view that at least till July, the CPI number could surprise on the downside, and again you could see the number staying below 4% for at least for the next couple of months. And WPI will also trend to move downwards from now on. Only we are seeing an uptick in the CPI numbers in the last quarter of this fiscal, and there could be some unfavorable numbers, say in January 2018, when the CPI could be closer to say 5.7 to between 6%. But overall, the whole year CPI inflation number average, we are still maintaining could be lower than 5%. WPI and CPI will largely resonate with each other, at least the food component, and only in the second half, possibly in the last quarter, there could be some divergence between the WPI and CPI, and the trend could reverse. I mean, the CPI could become higher than WPI. But as of now, given the demand conditions, I think the RBI would stay on a prolonged the pause and try to manage liquidity the way it is managing.
All right, Soumya, we'll leave it at that. Thank you very much for giving us all those components and your forecast as well. So at the